this day and age, there are a number of different kinds of stock compensation plans that are available to employers, and they get used widely, particularly here in Silicon Valley, but across the country and across the globe. We have incentive stock options and employee stock purchase plans, which are effectively treated the same way for reporting purposes. So the income attributable to those gets reported on the W-2 as income, as compensation income, but it's not subject to payroll taxes. Now, there's a new form that employers are required to file, Form 3921. Okay, get you a little detail here, that needs to be filed by the January 31st deadline. Okay, that's new this year. The second type of option that I'd like to talk about is a non-qualified stock option, which is a more traditional option. And for that, the employer is required to withhold taxes, just like normal compensation. They're required to pay payroll taxes, Social Security, Medicare, etc., and the employee is also subject to their share on that. So that gets reported on a W-2 or a 1099 if you're dealing with a non-employee. The other two items, or three items, I guess I'd like to talk about, are restricted stock units, restricted stock awards, and stock appreciation rights. The easiest of that is a stock appreciation right. And all that is the measurement of a bonus effectively based on the stock value. So when you have a stock appreciation right, it's going to be reported as compensation income because it's effectively paid in cash. A restricted stock award is a grant of stock that may vest or will vest in the future upon satisfaction of certain employment requirements. In that situation, the income gets reported to the employee, much like the non-qualified stock option, through the W-2, subject to all the withholding taxes and the payroll taxes at the time the employee vests. Now, in this one, I'll just caveat a little bit. There's also a thing called an 83B election you might want to look at. The last thing is a restricted stock unit, and that is just a promise to pay in the future, whereby you will award the employee with some kind of stock compensation, stock issuance, at a date in the future. That is also going to be subject to normal withholding requirements, payroll taxes, etc., but that gets reported in the year of the actual award. So 6 different types of instruments in this country. The only thing I will say is if you're going to be granting options or any of these things to employees in other countries, watch out.